First advantage of GST is more collectible tax for government compared to SST because more comprehensive and multi-stage tax system. Second is GST system encourage better compliance and reduces tax evasion due to its self-policy nature, where businesses along the supply chain have incentive to keep proper records. Third is GST eliminates the effect of tax as it allows for input tax credits, which means businesses can claim credits for GST paid on purchases. The last one is export are zero rated under GST, which means that export are not taxed, making Malaysian goods more competitive in the international market. Next is the disadvantage of GST. First, setting up the GST system requires substantial investment in infrastructure, training, and administrative adjustment. Second is small and medium-sized enterprises face increased administrative and compliance costs. For example, they need to update accounting system and pay staff. The next is businesses face cash flow problems due to the timing of GST payments and refunds. The last one is slow down economic growth. For example, financial burden on consumers reduce their disposable income, leading to decreased consumer spending. Advantage of SST. SST is often more perceived more favorably by the public compared to GST, as it applies less progressive and reduces the tax load on end consumers. Second is SST is generally considered simpler to understand and implement compared to GST. It involves fewer compliance requirements and administrative work for businesses. Third is businesses may incur lower administrative and operational costs, reducing the overall burden of tax management. The last one is SST typically result in a lower overall tax burden for consumers as it is only imposed at specific points in the supply chain. Disadvantage of SST. First, less comfortable tax for government compared to GST because SST covers fewer goods and services. Second is with fewer checkpoints in the supply chain compared to GST, there may be more opportunities for tax evasion under the SST system. This can lead to revenue loss for government. The third is SST is embedded within the price of goods and services, making it less clear how much tax is actually being paid by the end consumers. The last one is SST can lead to a tax effect, where taxes are applied multiple times throughout the supply chain, potentially increasing the overall cost of goods and services.
In my opinion, Malaysia should revert to GST to increase tax revenue. This is because, due to transparency in system of SST and GST, GST is more transparent to the consumers because taxes are clearly shown in the final prices of goods and services. Other than that, GST not only reduced the cost of doing business, but also ensured the appropriate rates for customers and most importantly, more transparent taxing structure, while SST is either way because taxes can be hidden in the prices of goods and services. For example, even though the SST rate increase is just 2%, but in reality the price of goods has increased by almost 10 to 20%. The comparison of these aspects are really important to the manufacturers because they are the one produce the goods and it is really maintained to get the buyers to consume their goods and services. On top of that, GST is more better taxation system as compared to SST, especially for the government to detect and allocate if there is some companies did not pay the tax. The self-enforcing mechanism of the GST encourage businesses at every stage of the supply chain to comply and claim input tax credits, in that way reducing tax evasion and increasing compliance. Therefore, every company in Malaysia could not avoid from paying tax, even if they are trying to do so, because GST involves the submission of detailed returns including the information on sales, purchases, and input tax credits claimed. This comprehensive data collection enables tax authorities to cross-check and verify information across different businesses and sectors.
Lastly, GST has a potential to enhance fiscal sustainability by providing a stable and broad-based source of revenue. This may help a country with high debts and enable a faster reduction in fiscal deficit and lower the debt ratio of government substantially. Furthermore, it will give flexibility to the government to reduce direct taxes, which is personal income tax and corporate tax, to make Malaysia more attractive as a business destination. Lower corporate taxes may attract foreign direct investment, FDI, which may lead to job creation, technology transfer, and overall growth in economy, while reduced personal income taxes will increase consumer spending, boosting domestic and demand. Considering the arguments presented by Prof. Emeritus Dr. Barzai Bardai and Raji Kumaran, I believe that GST is more suitable for Malaysia's economic context. It is because of the simplification of tax system. Implementing a single GST rate simplifies the tax system. Instead of having multiple tax rates and exemptions, a uniform rate like 6% makes it easier for businesses to comply with tax law and for the government to administer and enforce them. Significantly, sellers cannot easily increase their own profit margins when selling goods or services. sellers are constrained from arbitrarily raising price beyond reasonable levels, which prevents them from taking advantage of consumers during periods of high demand or scarcity. This ensures that consumers are not subjected to unfair pricing practices that could exploit their immediate needs or lack of alternatives. In summary, a GST rate of 6% strikes a balance between generating sufficient revenue for the government and maintaining economic stability and compliance among businesses and consumers.
Next, tax payment directly translate into financial resources that government allocate to improve infrastructure, expand services, enhance personal capabilities, foster innovation, and strengthen regulatory frameworks. These direct investment play a crucial role in elevating the quality and effectiveness of public institutions, thereby benefit society as a whole. In GST, all processes will be subjected to tax, so the government can easily gain revenue to improve our quality institution. For example, tax revenue is essential for the ongoing maintenance and periodic infrastructure upgrades. These include repairing roads, renovating public buildings, upgrading water and sewer system, and modernizing energy grids. Regular maintenance ensures that infrastructure remains efficient and reliable over time. In this point, we can see that resources will be better when Malaysia has better quality institution. My last point is that when Malaysia apply GST for tax revenue, it will align with international practices, as many countries use VAT or GST systems. This harmonization can make it easier for Malaysian businesses to engage in international trade. This is because the impact of COVID-19 is still there. There are travel restrictions, supply chain disruption, and consumer behavior change have all impacted trade flows. By adopting common trade practices and regulation that are widely recognized and accepted internationally, can promote harmonization. This includes custom procedure, tariff classification, and regulatory standards that align with global norms. Although diverse national interests and priorities may make complete harmonization of international trade practices difficult, moving towards greater alignment with global standards and agreement can help improve trade relations and boost economic benefits for Malaysia and its trading partners. After a lot of argument, our group have decided to choose GST to be Malaysia tax revenue system in the future.